Okay, so I will go over a couple of things because as you guys know, my goal is to make everybody improve. And I think that it's not possible or not sustainable for me to answer at every single questions you guys have on the chat. And I keep seeing similar questions, and I think it's just relevant for me to talk about subjects that are repeating, and potentially I'll answer multiple questions at the same time. Right. So first and foremost, I'll just go into some details on some questions I saw, and then we'll do a little Q&A portion. Okay. It's really important that when we mark up r- liquidity, we need to have zero doubts in our head that people entered there. Okay. I often use the word relevant, right? When something is relevant is we have no doubts, right? Let's give you a perfect example, right? And also the way I mark the liquidity should be the one you use, the same technique you use. I've seen some people doing this. I've seen some people only do like breakout or doing all kinds of fancy dotted lines like this. This is just causing too much confusion. Use the thick line like I do, right? The thick line here, and you mark it perfectly. You use your control key to bind the line onto that structure. You just drag it with shift. Shift makes it that the line is perfectly straight. I don't want to have, I've seen some people doing this or this. I need shift. So we repeat. We use the line. We press on control. So you bind to the structure, and then you release the control and you press on shift. Shift makes it straight. That's it. Boom. That's a valid break even, a breakout and zone. But we also have these equal lows. So we have our confirmed equal lows, right? You have the equal lows here, the zone, it's respected. There's a new high, even though it's an internal high. It's still relevant because of that push. A lot of members said, yeah, but for it to be relevant, it needs to go here. You are right. But our goal is to put this on paper, and with this engulfing candle, you have no doubts in your head that people want to get involved, right? This is important. You need trading. I have received some question about people. Is this always like that? Trading is really situational. If in this case price would have gone higher, like slowly like that, I potentially would have not put that that equal lows in there. But in that case, we have no doubts that we have liquidity here, right? This is how you should mark the liquidity. You should ask yourself the questions: is, do I have any doubts in my head that people are entering? Same as here, clear structural point. This structure led to the new low, right? You put a line here, right? So you would confirm also these equal lows, right? Similar stuff like that, right? It's simple. I've seen some people doing this, 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 and then their charts start looking like a Picasso uh thing, and like you get lost. Your goal is to identify where is the relevant liquidity, right? You will receive this invalidation shield indicator soon, this Friday, because we have the Asia session video coming on Friday. So that would make this point the valid equal Asia high, right? Valid Asia high. So I've seen a lot of people trying to figure out where the Asia low or Asia high are, and this is really important. I know a lot of people are trying to speed up the process, but the fact is you're potentially going to train your brain into wrong routes just because you are trying to make things up that hasn't been said clearly, right? So wait until you have the indicator and you watch a video before trying to figure out the Asia high or Asia low. And of course, this is probably my fault because I have a lot of more experience, and sometimes it's hard for me to just remove some annotations in my charting so you guys don't get confused. But if I didn't put all those annotations, some of you would be even more confused because I would be missing so much stuff in there, so you guys would not understand the trades. And then I'll have questions about people asking, why did you take the trades? Okay. And I'm really sincerely thinking about waiting until reposting in the Masters chat because I've received probably 25 questions just today on how to justify my trades, right? They try to understand my thought process, even though it was clearly indicated in the chart. And I think we're going into the wrong direction. The only thing I want you guys to do is properly notify liquidity, right? Um, Same as we spoke about the break even and stuff like that. We'll go over it in this call. What I want you guys to do is like use this imbalance indicator as a guideline, right? Some of you would write this as a breakout zone, but the goal is you already know that this potential push down is either an internal false breaker structure or we're coming back into this supply zone or this decisional zone, call it whatever you want, to just go higher. And people are trying to understand how to enter here. Okay. I know it sounds boring and I sound like a broken record, but the goal is to properly view those intentions, right? Up until this point, all right, from here to here, nobody in this chat can argue that the only thing we have relevant are people buying, right? Clearly, new structural high, right? Intentions are still trending upwards, right? Even though we have those structure broken here, we still have people trying to buy. Our goal is not to identify every single structure and trying to make things up like, okay, this made a new higher low, this made a higher high, but this made a higher or lower low. And then that would be a false breaker structure to here. And like, this is right. But the problem is, since I haven't talked too much about the SMTs and the false breaker structure too much, I just did one video. You guys need to understand that actually, when we have those false breaker structure, the only thing you're trying to target are the SLs, right? And in this case, if you see on a higher time frame here, right? Not higher time frame, but on M5, if you put this as a false breaker structure, I don't see this as a false breaker structure valid, but I mean, it's okay. And you see this as an SMT zone, a lot of you guys would get confused because this high hasn't been taken, right? And price traded away from it. And this is exactly what I'm trying to explain, that you shouldn't go into those doubts and ask questions about how come this SMT hasn't induced higher. Can you explain it? Of course, there is a reason, but just let me do the video so we all have the same knowledge. Because the last thing I want is to potentially explain something to a member and the other don't benefit out of it, right? Because not everybody goes into the technical chat and reads the questions or the answers. And I think it's just better that I explain everything once instead of explaining it multiple times. Okay. So that was my tip about marking up the liquidity. One on some broker, they take the high. Yeah, but remember, the goal is not to explain exactly why this didn't take the high. It's just that in some cases, like I had a question today, the price didn't take the high and exploded afterwards, but there is a reason. And I will explain you guys this in the future. I just don't want you guys to get caught up into too much of those stuff and trying to understand stuff that potentially you just don't have the missing piece of the puzzle, right? Because it's good to be curious, but the problem is you're being curious with information you're missing. So it's even more confusing when I cannot answer. Um, so, really, what I want you guys to practice is where are the clear breaks, right? Where are people trying to buy or sell? We know it. We want to know exactly where, and we identify, like I showed here, these are clear breaks. We know clear breaks, right? We don't have any doubts in our heads. So this is something I want you guys to really focus on, and especially when you send in the technical questions, this should be the only focus for now. Because if you properly view this liquidity, you will understand then why is it reacting from the left, let's say. Okay. Let's find a good example. All right. This, not this one, this one. That's EG. And these are bad days that we can find examples of those. Yeah, this is another good example, right? You have breakout traders entering here. Now I already have people in my DM saying, how can we have breakout traders entering here if there's no structural high, clear imbalance? You are right. But based on the price that we see here, we know that something happened here, and our goal is to actually uh, justify those moves, right? How come did price push lower here and left, right? What can we look and what can we justify in terms of price action to understand what happened? Is this because there's a break even zone? Is this because we have an entry that people got beat and price left? Is it because we have maybe that false breakout structure here and we have that reaction to that SMT here and then price went lower and then left? This is exactly what you should be doing right now. Justifications. Okay. You need to understand those moves do what and for what reason based on solely identifying liquidity, not oh, how come those lows are still there because this confuses me, blah, blah, blah. Let me give you another example. Okay. Let's go on EUR USD. Let's erase again those markups. Here we go. Can you go over inducement POIs? No, like I said, we are not focusing on anything else than liquidity. Okay, so here's a good example, Euro USD, okay? You can see price is actually building downwards liquidity, right? Blah, 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 blah. Okay, price pushes. Look, I have the wrong feeder. Sorry, my bad. Look how the speed and the momentum of this candle, right? Right? Look at the candles. You know that this induces people to buy, right? It actually does induce people to buy, but also since this is a relevant structural point, it hasn't made a new low, but you can see that it failed to make a new low and went higher. Potentially, we can justify those SMTs. And those SMTs cannot be predicted until we have those reactions, right? You see this reaction, boom. So you justify the SMT based on that reaction. But when the price is here, you cannot predict this SMT. You can have maybe an idea of this maybe being an SMT, but you cannot predict it. And your goal is to actually understand that those evidence are actually Can you explain, please, more about how to enter? No, I repeat, for the thousandth time. We're not going to over entries now, only identification of liquidity. Okay. So now we don't know that this is an SMT until price reacts, right? This is why candle closure are super important. Now, let's go over and understand here, right? We had, I think, this low this morning, okay? Right? And some people were actually saying that, oh, aren't these equal lows, right? When price was at this point here. For it to be equal lows, there's two things you need to check. It's either that price comes back and retest this zone like 25 times, or that price does a new high. Okay. And here you can see that price went higher, came back, retested, came back. At this point in time, you have clear evidence that those are confirmed equal lows, right? But also, when price pushes lower, this becomes equal highs. And this is okay to want to buy from here to take those highs. This is called a pullback, and it's completely valid. As a more advanced trader, you can trade against the liquidity. And this is something I do on a daily basis because I'm bored. I want to have fun. I don't want to take boring trades. But now you need to understand that those equal lows are now confirmed, even though it hasn't done a new high. But like I said, trading is situational. It came back, what, 4 times here and 1 time here. Now we maybe have some clear evidence that those equal lows will be taken, and look with the speed, right? But at the same time, with the speed, you have liquidity here. So you have breakout and equal highs, right? Entering here, right? So clear liquidity in here. So this is really, really something you guys need to practice, because when you mark up, okay, some people would mark up those things, right? Those meaty things, and it's completely okay. But once you send me your question, your responsibility is to come back and clean up those charts to make sure and to show me that you actually understand the concepts, right? If you see,
Raúl, a ver.
can we mute people, please? Okay, so this is where it's important to come back and clean those charts. We have some people and putting stuff in here. It's not clear, no relevance. We remove it, right? Same as here, right? Why would you put
A
a
ver.
thing here? Just gonna mute. We need to mute everybody because that's annoying. Okay, so the I remove all the sounds. All right. So basically, like I was saying, people would put a breakout zone here, but also put one here, but both of them uses the same structure. So why would you mess up your chart by putting stuff like this when it doesn't use the same structure and it's an internal structure? But in some cases, this is important to do, like here. You see here, breakout here, and breakout here. Since price push it with this structural leg, when it's not an internal structure like this, you want to justify the two entries to know exactly which one will be taken out first. Okay. This is two different things. So let's say, let's show you something like this, right? This one has an entry, right? This one has an entry, and this one has an entry. It's important, even though imagine this is all the same structural leg, right? From here to here, but these ones needs to be marked because of those potential break-even areas that can be triggered also, even though they use the same structural leg. Don't know if that's clear. But we would be able to go over this in the future. And that's
Bien, hasta ahora, chao.
uh, uh, let me just, I thought I disabled all the sounds. Okay, good. Now, what I'm trying to explain is that I see a lot of markups that people are trying to overcomplicate simple stuff, that your goal is not to put all those mini things like this. It will just add so much noise to your chart, and it's not going to help you understand where relevant liquidity is. And it's clear for you guys that when I say relevant, it equals where everybody enters, right? The goal is not to understand where you would enter as a retail trader, because I had someone in the technical chat say to me that that's how I was entering. But that's not our goal. Our goal is to understand who enters and like where the masses enters, because the last thing you want is to base your complete analysis on only your thought process based on how you were trading 25 years ago. Okay. um so what I'm trying to show you guys is that the only thing you should be doing now, and maybe, and the people that know exactly who they are, I already said really good markups, you're doing good. You could go and find more break and retest zones, or maybe SMCs or trend lines, because I've seen some trend lines, people doing this like this, right? This is this isn't what has been taught. The trend line needs to be a trend. Like, you need to have a clear trend line. You want to know exactly where the liquidity is built on which side, right? Like this. This isn't really showing you much other than you're forcing this trend line to fit here perfectly. If you want to justify, let's say, a false breakout structure, that's another story. But if you don't, try to focus solely on breakout traders, and this is basically all you need, right? Um, so I think that I want to go over the break even part. I'll just slightly go over it, because I like to do a full video about it, like a good an hour video, because the last thing I want is people to get so confused with this 30-minute call and then add more questions. When we have, okay, I'll go over it. When we have people entering, right? Let's say people are entering here, right? Breakout traders entering here, right? Now we have maybe break and retest traders entering here. So break and retest traders entering here. Now we also have breakout traders entering here. And let's say we have breakout traders, breakout traders entering here also. And now let's put the liquidity. Here we go. Again, I've seen some people doing this. This was a visual representation of me explaining where the stop losses were. You can just put one, no problem. And we have also this one here, right? When you buy, let's say you're a retail trader, right? You buy from here. I've seen some people also putting these guys already in break even here after like literally what 15 minutes of being in a position. They can handle a little bit of drawdown. And again, this is all based on my analysis. You can do your own research and confirm these things. How do you properly identify a break-even zone is based on the reaction of the entry. If you come here, if price comes with speed, momentum, wicks out of this zone, and then leaves, this confirms a break even zone. Now I've seen some people trying to buy from this. This is not what I've asked you guys to do, is just to justify those break even zones. You need to understand where people are taking out to then eventually, when you have more experience, trade against them. The only thing I require you guys to do is to properly understand where the break evens are triggered, just so you can actually justify that there's potentially no more stop losses here. But yet again, let's edit this markup and come back with another type of markup. Let's say this. This is another story. These guys are break even, the ones that entered here, but we also have that new structural low being made that uses this leg. So in this case, I've seen some people removing the stop loss here. It's wrong because we have these guys entering also, and it's using the same exact structure. So you cannot put an X here. And this is why it's important to identify each entries when they are important. All right. Let's try and find a clear example of what I'm saying. All right. Here we go. Here we go. Here we go. Let's find a clear example of what I'm trying to say. All right. Uh, 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 um, yeah, these are boring days. Boring days. Let's go CGPP. Here we go. Okay, perfect. Now, as you can see, right, price comes back here, retests this zone, right? For me, this is not a break even because it hasn't made a new structural high. But now making that new structural high adds evidence that maybe if these guys entering here, if they have a minimum of 2% brain cell, they will move to break even. And now we also have liquidity being built here because people are buying from there, right? And now this is where you would mark that maybe this stop loss here is gone. And look when price goes higher here, look how they take these people out, but at the same time, potentially enters, hits their break even. And now I'm not saying that if they hit the break even, that price should reverse and go to the moon. This also is something I've saw. This isn't what I've said. The break even only helps you identifying if this stop loss is still present or still valid or still there. Okay. But remember, we still have people entering here. Maybe if they made this new high, they move to break even. So this point can also be valid as liquidity. The break even, and this is probably one of my mistakes, I potentially made a mistake by showing you the break even zone and too soon, and it's just causing confusion. Because I've seen some people trying to spot where people would try to TP, where people would try to trail their stop loss. Your goal is not to guess anything. At this point in time, for me, I sincerely think that these guys, after what, let's say, literally 3 hours and 45 minutes, with the speed and momentum that this entry point has been potentially taken out to break even, right? But then we also have the false breakout structure here that also potentially gives you an SMT. And now people starting thinking that you have an SMT, that it will be taken immediately. Some SMT can actually work. It makes a new low here. You see the entry here, potentially they entered here or entered here. Look how it wicks, releases the liquidity and leaves. If every, and this is also another subject we'll talk into another video, if every single SMT would be liquidated in 25 seconds, we would have no SMT, see traders in the world, right? Every single retail strategy works to a certain extent. How many of those breakout traders you seen in profit for hours? Maybe we have people taking partials. Maybe we have people closing the position. And maybe in some cases, those false breakout structure, those structural shift actually entices people to enter and providing them perfect trades. But this is not where the liquidity is. And it's a really big difference on where's the liquidity and where you can trade. You should see, even with today on AU, I was trading the equal lows. Why? Because I was expecting those structural high to be broken to the upside and potentially take some partials. Trading in line with the liquidity is only a more advanced way to do it. It's not wrong. It's not stupid. It's just more advanced. And I do it because I'm bored of those boring trades. I want to practice. I want to evolve. And if I don't go into those no man's land, I'm never going to be able to become a better trader, right? So in this case, you could see that maybe here would have a valid entry, and some of you would understand the reasoning why. Okay. It's really important to note what I said. Each retail strategies has an edge to a certain extent, right? It works. It doesn't mean that this is where the liquidity is. It just works sometimes. And basically, it works to build liquidity. So if this SMC zone here provides a new low, doesn't mean that you cannot trade this. You can if you're more advanced, but you need to understand that you cannot target this low. For what reason? Because we discussed together that potentially this zone has been break even, right? So this eliminates the stop losses here because I see some people doing this, right? And then target defense and never taking partials. And then I received some DMs on Instagram, people saying that, oh, I lost this trade. What would you advise? Blah, blah, blah. Because they're not properly prepared with the foundations of identification of liquidity. I know it's boring. I know it's like probably not the way you guys are used to trade and you just want to get straight to the entries. I think I repeated myself 26 million times already that I don't want to talk about entries because people don't know where the liquidity is, but you will not regret it. The same way that going to the gym every single day, it's annoying, it hurts, it's painful, blah, 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 but you will not regret it because it will give you a good physique, right? So please properly practice the identification of liquidity. You will not regret it. Once it clicks, literally once it clicks, you will just see it with your blank eyes without even marking up anything. You will understand, you will see it in the same way that I'm able to see if a day is shit or no, you'll be able to do it. And then you'll be maybe having fun also, like me. So that was what I wanted to talk about because I feel that I'm literally answering questions in the technical chat for people just putting lines, random lines. And I think that I'm not going to be able to sustain the questions because I just repeat myself every day. And people want me to approve their markups, and I understand. But the fact is, if they send me a markup and they ask me to approve, and they just forget to put the most relevant breakout zones in their chart, it just tells me that they haven't properly done their work and watching the content in practice. So please just trust me. The same way if you guys saw the movie Karate Kid, when he was waxing on, waxing off, he was pissed at Mr. Miyagi, and then he became a champion. So the same way that I'm trying to practice your memory, your muscle memory brain on marking up this liquidity, you will not regret it. I'm telling you, if one person can give me a good reason of why they shouldn't mark those retail traders liquidity, I give them $10,000. Okay. Otherwise, please continue working. And if there's any questions, we'll go over it right now. Let me just cancel the recording. Give me a minute.